Hey, Paul.
Welcome, Paul. Thanks for doing this.
It should be fun.
You say that now, but...
Now, Ross, behave yourself.
Be nice to the guests, please, Ross.
Yeah.
There's just mild hazing involved.
From New York Times Opinion, I'm Michelle Cottle.
I'm Ross Douthat.
I'm Carlos Lozada.
And this is Matter of Opinion. So our beloved Lydia is out, but we have drafted an extra special guest to help us out this week. We've been talking a lot about big issues at play in this year's presidential election, and today, by God, we're going to try to understand what exactly is going on with the economy. Are we headed into a recession? Are we just having what all the cool kids call a vibe session? What's driving public feelings about the situation? And do those feelings favor Joe Biden or Donald Trump? Now, we'll get to politics later, but first, our Times colleague, the Nobel Prize-winning economist Paul Krugman, has graciously agreed to step in and help everyone, especially me, make sense of a very confusing economic picture. Paul, welcome. Thank you so much.
Welcome, Paul.
Hi there.
So we are obviously delighted to have you here. And my opening question for you about the economy is, am I right to be confused? Are you confused? Help me out here.
I'm actually not feeling very confused, which is probably a bad sign. But, basically, it's still mostly a story of a soft landing. That a very rough couple of years, mostly as a result of aftershocks from the COVID-19 pandemic, inflation with some bumps, pretty close to where we want it to be. Could there be a recession? Always. There can always be a recession, but there's very little hint of one in any of the data that we have right now. So I'm much less confused now than I was a year ago. Right now, the picture looks pretty clear.
We had never in my lifetime had a global pandemic as an economic factor. Can you just sort of tell us your story about why 2021 and 2022 were so bumpy? What's your story about inflation right now and other problems as well?
The main thing that happened, so it was, what in the jargon we call a supply shock, but a funny one. It wasn't so much that people stopped producing stuff or couldn't produce stuff. What happened was that people changed what they bought. So that, the elitist kind of classic example, but it representative, people stopped going to the gym and they bought Pelotons instead. Or they stopped going out to eat and they bought kitchen equipment instead. There was this big shift of demand from in-person services to goods. And it turns out that in the very short run, the economy isn't as flexible as all that. So if people start wanting to buy stuff, physical stuff, instead of in-person services, well, that stuff has to be produced, has to be shipped. And right at the beginning, actually, the White House did an analysis back in 2021, just as inflation was taking off, saying, what does this look like? And they said, this looks like the immediate aftermath of World War II. This looks like the period when we were reconverting from a war economy back to a peacetime economy, which was a period of major inflation. And that analogy, for a while there was people saying, well, this is going on so long, how can that be the story? But in the end, it does look a lot like sort of 1947, 48.
But why does inflation take off then as the pandemic ends rather than at the peak when everyone's ordering Pelotons?
Well, actually, the peak, remember, the economy was quite depressed. And so overall spending fell quite a lot during 2020, during the worst of the pandemic. Mm-hmm. It's when the economy started rebounding, but rebounding in a different way. Well, we had 14% unemployment in 2020. And with 14% unemployment, it doesn't matter what people are buying. There's plenty of excess capacity to satisfy it. But when you start getting back towards 5%, 4% unemployment, but the stuff that people are doing with their wages is now very different from what they were doing before, that's when inflation takes off. By the way, I think it's worth pointing out, we're Americans. We don't believe the rest of the world exists. But the cumulative increase in prices in the euro area is almost exactly the same as it was in the United States. So you have a place that, never had the Biden stimulus, never had a lot of our policies, and yet their inflation experience, there was a little delayed. Inflation took off sooner and ended sooner, came down sooner in the U.S. But if you look at the cumulative from, January 2020 to January 2024, both sides of the Atlantic look the same.
Is your implication then that inflation was more of a reflection of kind of like larger forces and not necessarily induced by policy moves in the United States?
Yeah, I mean, that's, for a while there, it looked as if that big Biden spending package was driving it, and it may have brought the inflation forward in time. So we had our inflation spike sooner than the Europeans did. But in the end, and particularly you can look, if you look at how inflation came down, it was not at all. There were a lot of economists, thankfully I wasn't one of them, who were saying we're going to need massive unemployment. And only by throwing the economy into a recession can we bring inflation down. Instead, inflation came down painlessly. And if you look into the details, it was very much the parts of the economy where supply expanded as we sort of worked out the kinks from the legacy of COVID, are the places where inflation came down most. So it's really consistent with a story that says that these were these larger forces that we probably would have had about the same inflation cumulatively. The timing might have been different, but it would have probably been about the same, whatever the policies had been, whoever had been in the White House.
So to maybe simplify things a little bit, people are now doing better than they were pre-pandemic. And it seems like after a bout of inflation, right, the key question is, at what point do wages start outpacing inflation again? Because that's the point at which most people are going to start feeling like the economy is doing better, is actually improving. And there's a lot of, in the data, a lot of different arguments about where we stand with that. But what's your view on where are we with that? When did wages start outpacing inflation again from your perspective? How long have wages been growing faster than inflation, do you think?
Oh, no, it's well over a year. I mean, inflation peaked around the middle of 2022 and has since fallen off drastically. And you really have to torture the data not to find that most workers are certainly better off than they were in January 2023, and better off by a few percent than they were in January 2020. And right now, if we're just going to be looking at recent developments, it's all sunny.
Paul, I wanted to ask you a little sort of more deeply about COVID. I mean, there's been so much discussion about how the pandemic has affected our, workplace culture, our relationships, our commutes, the way we live, et cetera. But what would you say is the kind of lasting legacy of COVID for our economic lives, not just in a sort of aftershock kind of sense, but in a more long haul kind of sense?
Yeah, I mean, it's not at all clear. There were a lot of things that people thought were going to be long-term affected. They thought that, a lot of people would leave the workforce and never come back, which has turned out to be basically not true. The big thing is actually working from home, which it turns out that enough people like it and enough businesses have adapted to it that's a permanent change, which has, it's probably beneficial for the economy as a whole, but it's not beneficial if, you're the owner of an office building.
Is it beneficial just because it's more efficient?
Well, the evidence on what it does to productivity is mixed, but there's a lot of time that people spend commuting that is now saved.
Yeah, I only wash my hair when I have to come in and see Carlos. So
I haven't washed my hair in 6 months, so it's really...
Actually, one funny thing is when people did start, I'm back in some in-person meetings, but everybody gave up on ties.
Oh,
so we
hallelujah.
Ties are
finally
over.
ended the tyranny of the men's tie.
Ties are so over. So obviously we're in better shape now than a couple of years ago, but it's not entirely clear that the public opinion has caught up with this yet. So where are we in the so-called vibe session? And by that, I mean how people are feeling about the economy.
I'm spending a lot of time on that, as I think everybody who's reading me knows. And that's a very weird thing. If you say Americans don't feel good about the economy, strictly speaking, Republicans don't feel good about the economy. among self-identified Democrats, consumer sentiment, which was fairly low when inflation was at its peak, is right back to where it was before the pandemic. Among Republicans, although it's up some in the last few months, it's still very depressed. So people's evaluation of the economy seems to depend on their politics instead of the other way around.
All right, so before we get too far into the politics, this seems like a good time to take a break. We will be right back. And we're back. Now we're going to take all that information that our special guest has explained to us. Thank you so much, Paul.
Oh, yeah.
And debate the politics. And I know we all have opinions on this one. So let's start with the voters. Why do we think that people on both sides are a little bit pessimistic?
Yeah, I mean, I think Paul mentioned the partisan gap in the way we think about the economy. And that means that to some extent, your views on the economy depend on whether your party, your favored politicians are in office. That seems to be stronger for Republicans than for Democrats, whose views tend to track a little more with the actual economic indicators. But I think there's a way in which even a sort of nominally strong economy can still have you feeling pessimistic. I just look at my own circumstances. I have a good job with a good salary, but I'm scared that, AI is going to kill that good job and that my good salary will never be enough to pay 3 college tuitions that are facing me down, And so I think there are ways in which you can sort of look at positive current conditions and still be concerned about sort of long-term economic prospects. And that can cloud that vision.
So the anticipation of trouble down the road. So it's not that people aren't necessarily responding rationally. They're just looking at a longer term.
I'm just saying that those are rational concerns, right? Depending on your time horizon.
My last newsletter was called Believing is Seeing. And it's definitely the case that a lot of voters' perceptions of the economy and of other stuff are very much based upon what they think based on their politics should be true rather than, what's actually going on. And it's really clear in the economic data. It's really clear on views on crime. Now, should everybody be feeling happy and comfortable and at no risk? No, of course not. Could technology come for your job? Yes, of course it could. I guess my question there is always, when has that not been true? Technology doesn't have to be AI. It doesn't have to be robots. It can be anything. But it's hard to really think that the amount of risk and uncertainty is greater now than it's been pretty much since the Industrial Revolution.
I think it's worth speaking up for the theory that I know Paul disagrees with to some extent, that people just really don't like inflation in a way that lingers in polling data and people's perceptions of the economy even after the sort of headline number inflation rate has come down.
Well, historically speaking, do we have a sense of how long that lasts?
Estimating lags is one of the hardest things to do.
Yeah.
In principle, we tend to look at inflation over a 1-year period, and it makes a lot of sense to think that people's memories extend further back than that. Not forever. I don't think people are out there pining for the days when a McDonald's hamburger was 15 cents, but the idea that people are still shocked at how much prices are up since 2019. I was much more of a fan of that until I started looking at the consumer sentiment numbers, which among those who are persuadable, those numbers started turning up in the second half of 2022.
Before you go farther, can you just explain the difference, for those of us who are not economists, the difference between consumer sentiment numbers and what we were originally talking about?
Oh, okay. Consumer sentiment, we have various surveys that in one way or another ask, is the economy good or not? How good are you feeling about the economy? We also ask people, by the way, how are you feeling about your own finances? And there's been a really big gap there. If you ask, how was 2023? We have large majorities of people of all political affiliations saying, okay, good or great. And if you ask, how was it for the country? than if you're a Republican, you say it was disastrous. And there appear to be a lot of people who you ask, how is the economy doing? And their answer is, I hate Joe Biden. But for what it's worth, among people who don't appear to be answering that question, their assessment of how the economy is, what's the state of the economy, started turning up in the second half of 2022, just as the inflation numbers started coming down. And, the argument that says that people care about the level of prices, not the rate of change of prices, which is the inflation rate, that has a problem with the timing. And again, I want to separate out a little bit, but among people who don't self-identify as Republicans, views of the economy have improved right in tandem with the falling inflation rate. So, I mean, what Ross was saying is something that I actually, if you'd asked me 4 or 5 months ago, I would have agreed with. But I've been, looking at the numbers on what people say about the economy, and they don't actually seem consistent with that story.
But so I'm looking at Gallup data right now on a question that sort of tries to unite the political and the economic, the famous "Are you better off than you were 4 years ago?" question, right?
Yeah.
And so in 2020, not surprisingly, when Donald Trump was on the ballot, this is pre-COVID, right? 90% of Republicans say they're better off than they were 4 years ago. 30% of Democrats, so you have a big partisan divide on both sides, and 60% of independents say they're better off than they were 4 years ago. Flash forward to Biden, and the partisan numbers swing. Now, most Democrats say they're better off. Most Republicans say they're worse off. But for independents, it's 48% saying they're better off, down from 60% under Trump. So if you take independents as a kind of control group, and obviously they lean left or right, but some of them are swing voters, they do seem unhappier right now than they were in 2020. And if it's not inflation, we need some explanation besides Fox News for why those voters are sour on the, how has Biden done question.
I mean, do we think people are just sour in general because they have a pandemic hangover?
Well, I talk to political scientists, and you ask them about independence, and they say they basically don't exist. That the great bulk of people who say they're independent are really strongly partisan leaners, either Democratic or Republican. There's only a small segment of the population that's truly independent. And if we ask why independent voters are down on the economy, well, think of the independents as being half Democrats and half Republicans, and we know that these partisan effects are much stronger for Republicans than they are for Democrats. They exist for Democrats, but the independent number is going to be somewhat depressed because the people who say they're independents but are really Republicans are going to be much more passionate in being negative about a Biden economy than the independents people who claim they're independents but are really Democrats. Paul, it's not clear to me that that's additional information.
But that does not explain the wild swings in Joe Biden's approval rating. In 2021, in the first year of his presidency, he had approval ratings consistently near 50%. And today, his approval ratings are much lower, and he's losing to Trump, which he never was in the polls in 2020. So even if you say the number of swing voters, genuine swing voters, is really small, still, there are clearly some genuinely unhappy swing voters whose unhappiness will determine the outcome of the next election.
Yeah, which brings me to the question of this kind of pessimism does tend to come back on whoever is in charge. So what do we think the president should be doing about all of this as he goes into this very tough race?
Yeah, the short answer is why should I know? But look, what I think is quite possibly true is that there is a hangover of discontent, reflecting not just inflation, but just in general. The pandemic was an enormously disruptive event. I don't know if there's a formula. I mean, there are some people on the left who say, oh, Biden shouldn't talk about how good the economy is because there are lots of people who are still poor and suffering. That's always been true. And if a Democrat can't run on his record because we aren't utopia, then that's a counsel of complete political despair. They can try to talk it up, but I don't know. I mean, if I had to say the thing that most amazes me about the current state of political debate is the way that most of 2020 has been kind of vanished down the memory hole. People talk about all the great job market under Trump, but that he was the first president since Herbert Hoover to leave office with fewer Americans working than before. So people sort of say it's as if history stopped in January 2020, and everything after that is not his fault. But somehow all of the pandemic-related stuff that continued after Biden came into office is his fault.
I just wonder that one way to maybe square that circle is that, the pandemic in 2020 was a shock to the system. And perhaps that is one reason why Trump would get somewhat more of a pass than when Biden comes into office a year later, already kind of knowing that that's what he was going to be facing. So perhaps the standard can be higher than for the president who is surprised by the event along with the rest of us.
Yeah, I wonder how much of this is public expectations on kind of what the timeline for a return to normal would be. And that obviously was on Biden's watch mostly.
Yeah, we were all, everyone was surprised by, there was, within the economics, there was team transitory versus team permanent. And at this point, it looks like team transitory was right, but transitory turned out to be 18 months, not 6 months. And what I think you can say is that it may be true that people saw the pandemic as a global event outside the president's control. They don't see the inflation that happened afterwards as a global event outside the president's control, even though, if you look at the numbers, it was. But, how many ordinary Americans are looking at European inflation statistics? So I'm not sure that we really know in these days what to make of any of these things. I talked to political scientists, and they've been saying, presidential approval just doesn't mean what it used to mean, because we now have such hard partisanship that the presidential approval is remarkably insensitive to developments in the world. So we really don't know what to make of this. And anyone who thinks that we can predict the election based upon polls right now is in for a tongue lashing if you talk to any actual serious political analyst.
Paul, I want to take you for a second in the Wayback Machine here, and you wrote a book in the 90s called The Age of Diminished Expectations, which I read in graduate school, and if I remember it correctly, you wrote that even during periods of sort of broad economic expansion, the economy is just not delivering the kind of progress that Americans had taken for granted in the past. You had people feeling worse off than their parents, fearing their kids be worse off than they were. When you think about that, sort of these 3 decades later, what are our economic expectations like now?
Well, I wrote that book, in 1989. Believe it or not. So it's, it was.
I read one of the later editions. You kept updating it.
It was a different world.
Yeah. When I was writing that book, the big story was that we had all this fancy technology. Personal computers were still new and trendy, but it wasn't showing at all in economic performance. Then, we've actually spent the last 15 or so years in another period when we have all this fancy technology that doesn't seem to be delivering a whole lot in terms of people's living standards. So I think people are feeling sour. I think at some level people do look and say, well, I have all this technology that my parents didn't have. Why am I finding it so hard to buy a house? Where is the American dream, which is partly just nostalgia? And again, just want to come back and say that this is we're just a far, far more divided society than we were. And it's a lot of the negativity comes from people who don't like where the country has gone politically, culturally, rather than a response to sort of concrete conditions.
So wrapping all of this together, do we think that this economy as an issue is going to favor Trump or Biden in this election? My thought is that it's going to be Trump, just because it always comes back on whoever's in charge.
It could benefit Trump in the way that you say, Michelle. I also wonder to what extent we think that partisan gap in perceptions of the economy is sort of immovable, or if a sustained, period of several more months of, positive economic outcomes could put a dent in it. In which case, it's by the time November rolls around and people are voting, you could see a strong economy benefiting Biden. I guess I don't know what sort of economic growth, how strong does the economy have to be to overpower the partisan lens through which voters look at the economy?
I have actually almost exactly opposite take. Which is that right now, if you look at who thinks that the economy is bad, it is basically committed Republicans. And they're never going to vote for Biden regardless. And there's been a big improvement in perceptions of the economy among Democrats, which might mean that it actually doesn't matter at all, that nobody's going to move on this. And it might mean that some people on the fence will, in fact, notice an improving economy and go for Biden. But my personal guess is that the economy will actually altogether be less of an issue in this election than people imagine. That it's going to be decided on enthusiasm, turnout, driven largely by non-economic issues.
All right, so Paul's a vote for it's not the economy, stupid.
Right. Democrats have been doing really, really well in special elections, but that's not because people voting in Queens or whatever are feeling good about the economy. It's because the non-economic issues have actually been playing in Democrats' favor, that people are being turned out by Roe v. Wade, and they're being turned out by fear of authoritarianism. This is really, it's the economy, stupid. That was 1992. And 1992 was a long time ago. It was really a very, very different country. And since then, the economy has mattered. It seems to matter less and less for the election.
All right, Ross, you want to have the last word on this one?
Yeah, I mean, I'm a vote for the economy matters. We don't know for sure why people, again, not just Republicans, are unhappier with the condition of the country than Paul's analysis of where we are economically says they should be. But I still think the way to bet is that if you have, 6 months of a booming stock market hasn't gone up much under Biden. Now it's going up. 6 months of wages continuing to outpace inflation. 6 months where inflation actually gets down to where it was before Biden, which it hasn't yet. Then that helps Biden win. There are locked-in coalitions, of 40 to 45% of Americans, but just in both 2016 and 2020, you saw real swings of different constituencies. And again, it matters on the margin, but I think that happens again. Whereas if inflation starts creeping back up, I think that's really, really bad news for Biden's reelection campaign.
So you're it depends.
I think it's
I think
it
right?
depends, but I think that if you take Paul's understanding of where the economy is right now and you project it forward, you just say it continues for 6 more months, I think you would bet on Biden winning re-election.
One thing I'll say is that even when it was the economy stupid, it wasn't really the economy stupid in 92. If you remember the full slogan in the war room with Carville and company, it was 3 parts. It was change versus more of the same, the economy stupid, and don't forget about healthcare. So even then, it was multiple things
right.
that they were focused on, and I think that's still the case.
Can I ask one more question?
Well, I guess you can now.
Paul, I just want to ask about America's fiscal capacity, meaning how much money we can spend in the future without running into inflation again, because it seemed to me like one of the big lessons of the entire Obama era, where I think, you were consistently arguing that America could get away with a lot more deficit spending than a lot of conservatives and Republicans and even Democrats thought. And that seemed to be true throughout Obama's presidency and throughout Trump's presidency. But now in the COVID era, we spent a ton of money. We got inflation back. And I'm just curious where you think that argument stands. Can America take on more debt in a Biden second term, in a Trump second term, without just having inflation immediately come back, whether it's via new spending or tax cuts?
Okay, I don't think inflation is the issue. The question now is there a limit on how much debt the U.S. can run up? We are running persistent deficits. The level of debt relative to GDP has been rising and is now at its highest level since the end of World War II. And it's one of those things where you look at it and you say, well, this can't go on forever. On the other hand, you look at the history of advanced countries borrowing in their own currencies, and you find that it is really impossible to find any example of a country hitting the wall. And so there is an issue that we have an aging population, that we made a lot of promises to people who are at or approaching the age of eligibility for Social Security and Medicare. And at some point, in some sense, we have to find the resources for that. But it really doesn't, there's not a hint in market reactions, not a hint in international history that we're anywhere close to hitting that breaking point.
Okay, so listeners, we'd like to hear from you on this. So please tell us how the state of the economy will affect your vote and why. Leave us a voicemail at 212-556-7440, or you can email us at matterofopinion@nytimes.com. So let's take a quick break, and when we come back, we're going to get hot and cold. And finally, it's time for some hot cold, where every week one of us shares something we're into, over, or somewhere in between. So, who's got this week?
It's me. I was going to say something about being hot for showing kids old movies, meaning, from my perspective, movies from the 1950s, 1960s, and 1970s. But actually, what I'm hot for is using old movies to acquaint your children with the harsh realities of aging and mortality. In recent days, we have showed our kids a couple of movies. The Man Who Would Be King, the Rudyard Kipling adaptation with Sean Connery and Michael Caine. Great movie. And the even better movie, Bridge on the River Kwai, from 1957 with Sir Alec Guinness, Also a great movie. And in both cases, our kids' previous exposure to Alec Guinness was, of course, as Obi-Wan Kenobi, right, in Star Wars, and to Michael Caine was as Scrooge in The Muppet Christmas Carol. And so in each case, we basically rewound the clock on those actors. And my 11-year-old daughter just sort of stared in horror and shock when she realized that the voice of Alec Guinness as, the middle-aged, 40-something British officer was also the voice of the aged Obi-Wan Kenobi. And Michael Caine, our kids basically think that Michael Caine is like, the biggest global celebrity ever because he was also a voice. I think he was a voice. He was a voice in Cars 2 where he was a British secret agent, right? So he's yes, everywhere.
Yes, that's right.
We showed them the famous, Michael Caine impersonation.
That impersonation contest is glorious.
It's Michael Caine. No, that's not Michael Caine.
We've been doing Cold War movies at home. So recently, The Manchurian Candidate, Dr. Strangelove, War Games.
Oh, War Games.
Yes, it's excellent. So that's been our kind of, dip into old-ish movies.
It's funny because we've been taking a bit of a time trip as well, streaming Rumple of the Bailey.
I've never seen that.
Well, we've had fond memories of it, once upon a time. Watching it again, two things. One, God, Britain was a lot more British than it is now.
Careful, Paul.
It's just the whole culture seems far more alien than modern Britain does to an American. And second, maybe it is getting older. And I turned on the closed captioning.
Oh yeah,
because I was having a little trouble understanding. All of this received pronunciation is actually harder to track than it used to be. But actually, in a way, it's a demonstration of how homogenized global culture has been, because I think Britain and America are a lot more similar than they used to be.
All right. Well, on that international note, I think we're going to call it for the week. Paul, thank you so much.
Thank you, Paul,
for coming to help us out.
Thank you so much, Paul.
Thank you.
All right, guys, let's do this again next week.
See you next week.
Matter of Opinion is produced by Sophia Alvarez-Boyd, Phoebe Lett, and Derek Arthur. This episode was edited by Jordana Hochman and Alison Bruzak. Our fact-check team is Kate Sinclair, Mary Marge Locker, and Michelle Harris. Original music by Isaac Jones, Carol Saburo, Sonia Herrero, and Pat McCusker. Mixing by Pat McCusker. Audience strategy by Shannon Busta and Christina Samuelewski. Our executive producer is Annie Rose Strasser.